Welcome to today's market report. European stock markets are seen opening higher on Friday, helped by late gains on Wall Street overnight, although the positive tone will be tempered by ongoing concerns over rising COVID-19 cases and the region's slow vaccine rollout. DAX futures in Germany traded 0.1% higher, CAC 40 climbed 0.7%, FTSE 100 rose 0.8%. US stocks rose in a late-day rally on Thursday, with the S&P 500 closing up 0.6%, snapping a two-day losing streak, and the Dow Jones rose 0.6% and Nasdaq ended up 0.1% up, but had been down more than 1% intraday. Asia largely followed this positive lead, and European equity markets look set to end the week pointing higher. However, the region's third wave of COVID-19 cases still shows a few signs of easing, while Italy and Czech have flattened their infection curves. Cases continue to rise in Germany, the Benelux, Austria, and most alarmingly, France. Poland also registered a new record high for cases on Thursday. A virtual meeting between EU leaders to discuss the issue continues later Friday, having started on Thursday in a fraught fashion after French President Emmanuel Macron expressed frustration over vaccine rollouts that are far behind those of Britain and the United States. The EU has already unveiled plans to tighten oversight of vaccine exports that would allow greater scopes to block shipments to countries with higher inoculation rates. Another reason for concern is the rising tension between the West and China after the EU joined the US and a number of Western countries this week in imposing sanctions on officials in China's Xinjiang region over allegations of human rights abuse. Data has shown that more than 70% of the Xinjiang cotton is made by machine, yet the West has somehow linked the cotton with forced labor. Burberry became the first luxury brand assailed by the Chinese backlash earlier on Friday, with its well-known tartan design removed from a popular video game. UK retail sales fell by 3.7% on the year in February, slightly improvement from the 5.9% drop the previous month, but still indicative of a difficult situation with a lot of the country locked down. Oil prices rebounded on Friday amid worries that it may take weeks to free the container ship stuck in the Suez Canal, blocking supply through the key waterway for a prolonged period of time. US crude futures traded 1.9% higher at $59.67 per barrel. Brent contract rose 1.7% to $62.98 per barrel. However, both benchmarks are on course for a weekly loss of about 3%, with the fresh coronavirus lockdowns in Europe hitting the outlook for demand. Gold futures rose 0.1% to $1,725.50 per ounce. On the FX front, GBP/USD has been advancing amid some calm on the vaccine front and upbeat UK retail sales. Nonetheless, sterling's strength may be insufficient in the next dollar storm. The UK is pushing through with the next phase of reopening the economy amid its successful vaccination campaign. The government's move does not face pushback from the medical community nor the opposition. EU leaders have toned down their rhetoric and seem reluctant to slap vaccine export bans, which threatened to derail the UK's immunisation campaign. However, this is also where potential troubles could begin. The bloc's members also gave Brussels the authority to stop shipments, and tensions remain high amid growing frustration about the EU's sluggish vaccination campaign. COVID-19 infections are rising in the US, with 26% of the population vaccinated. The battle against the virus is far from over. Moreover, Friday's personal spending and personal income figures for February will likely be more subdued, potentially dampening the mood. The GBP-USD pair maintains a top below a cluster of supports being centered on 137.79, including its medium-term uptrend, and a move below 136.93 needed to clear the way for a fallback to 136.70 and then the 38.2% retracement of the September-February rally at 136.41. Euro-dollar holds 3 consecutive daily pullbacks, including new 2021 lows in the 117.60 region, and manages to advance to the vicinity of the 118 zone on Friday. The dollar index was down 0.1% at 92.793, just below a 4-month high of 92.868. Dollar yen was up 0.1% at 109.25, near its highest since June. This is today's market news. Thanks for listening. We'll see you next time.